Good morning. Good morning. How y'all doing? All right. Yesterday was the consolidation day that we anticipated. It was pretty choppy and sloppy, back and forth. And so now what? Well, the pattern that we've got in the S&Ps here, I would say historically result in a somewhat similar day. Ideally, we would get a correction day. And by that, what I mean, correction bar, continuation pattern is one in which prices would break down under yesterday's low and then by the end of the day recover. So we always look for wide range bars. You had one wide range bar, slightly less in range, but still relatively wide to the ones that preceded it here, not like this one. But this wide range bar did exactly what it's the factory work master trader method says it's supposed to do. Candle bodies stay in the upper half, ideally the upper third if that's possible. Tails are okay to go below 50%. And you see this one did, and then it recovered. This one took a few days before it went. So whether it's today or tomorrow, it could be something similar to this. But what we look for is a break below a prior bar's low, a violation of first reference point of support, and then a recovery, and then a trade above that bar's high is the continuation pattern. So looking for prices to trade down. And so here's our first support. You can see there's nothing here down below here. If it breaks below this pivot low, which opens up the door to dropping down here, or can it create support? What does that mean? Well, on some time frame, I would use the 5-minute. Can it create, if it breaks below this pivot, which you can see is around 40.51-ish or so, give or take, breaks below there and then creates a pivot, and then maybe a retest of that, you get a long setup that produces the tail bar. Okay, we'll see if that actually happens. So there's in here is where the significant support is. Okay. So SPX for today, as prices are inching down below here. Let's just look at spiders for a second. We don't get a bar there. We have to go back to the, anyway, it's below that. It's not down below there. Let me go back to spiders. 405. So trading below yesterday's low and a little minor topping tail. That does no harm whatsoever to this daily chart, which is bullish, but there's a big void below. So the concept of a correction bar is one in which, by definition, it corrected. And so prices do not have to pull back to fill the gap. Ideally, they will not. Of course, they could, but that there's a big hole there with nothing in between those bars for prices to come down to. So it needs to do, call it back and fill, call it create support. It needs to develop a pattern that says demand is strong enough to hold and create a new support level up above where there is no support. Well, there's nothing there. So it's traded down to 405.40. It's not below 405. 405.40. What is this low? Is 405.40. Lo and behold, look to the left. That's yesterday's low. That's the prior day. So it's holding near that prior day's low for now. It's in a downtrend, and the next stopping point, let's see. Okay, that's the low. There's nothing below here. So it needs to take another bar to create a pivot, retest sideways, or down into the void. And so we'll see what happens. And we got plenty of pivots up here. So now that's resistance. So let's go back to SPX. And there's our pivots. And so you could say, well, how about a spread for 40.90? Well, that could work. Let's look there, but 90, there's plenty of juice there. But you could, for a little extra measure, 40.95. I turned my head out. Go to 40.95, get an extra few points, or just go 4,100. Now, it isn't a huge premium there, but I think it's probably as close as you'll get to sure money to sell that spread. It won't be a lot, but hey, if it pops back up here in the morning, maybe that comes up a little bit. Take a look. So on the downside, thought I marked this off. Oh, here's where I put it. Right through here, there's a whole bunch of open interest between these strikes, which should provide some support if we get some kind of ugly dip. Right? There's nothing below here. So there's no moving average of significance, 20 and 50. I don't know where the 10 is. We could certainly look. I don't think that would serve as much, but no, even the 10 is down there. There's a hole. Okay. So there's nothing here. This is the area, or let's say down there. You could go down to 40.20 where there's an unfilled gap. That is as close to what I would say is the no-brainer. Yeah, 20.25 would be the no, would, I'm not so confident to call it a no-brainer with this market, but look, you've got this level, which will serve some support initially. And okay, again, this dip coming down to 40, 50 would certainly be in alignment with a correction bar day, right? We don't want to see tails go down below this wide range bar, right? But tails that go relatively deep into this bar and then a recovery to come back up would be okay. Right? Candle body in the upper part, ideally in the upper third. So you've got a level here, and then down below here, there's nothing. So you go into 20, 40, 20, 40, 25. There's some premium. It's pretty darn far away. And there you have it. Right? Those are the choices. And I think they're good choices, but, it's one in which the timing of entry will make a difference. And, you could take some heat on it. You're not ready, right? Take the heat in the kitchen with these, just stay the hell away. All right. I am. There you go. There's McGraw. I think that is the play. All right. All right. All right. So YM is kind of drifting down here. You can see lower high, lower lows coming into that prior pivot low. So there's support below there. And Qs. See a little pop breakout failure there. Upside shakeout, head and shoulders top, void below. Looks ripe for some type of pullback to continue. Russell, right, holding here, kind of just drifting down. So a lot of patterns at this point, kind of like we need more information. That's what we often say. We need more information. And that's the truth, because we don't have an event bar or a something bar, or whatever you want to call it, something that sticks out as saying that this is a significant reversal. We don't have that yet. So bonds are up here a little bit, no big deal, coming up into resistance where maybe next dive down. That's the 30-year. Here's the 10-year. Right, not quite up there, but it typically doesn't move quite as much. And oil doing nothing. And the oil stocks, the ETFs, they didn't have a good day a couple of days ago, and yesterday they didn't do so great either. So gold, right? We talked about this yesterday in the room. I said best not to enter at this point, even though it's shaping up. Got bottoming tail bar last week. It's at resistance. Let's see if it dips down. Let's see if it goes sideways here. The concept of absorbing supply. Right? What does that mean? Well, it means that demand is strong enough to make prices go sideways at resistance rather than drop again. So what we look for is dips and reversals. We can see that it's holding here, but if it was to break below this low and recover, that says that buyers are sitting down below here, ready to buy on a dip. So we want to see that it has that strong demand. And silver, you can see sideways, different pattern, but sideways so far. And again, let's see if it dips down or goes sideways for a while. Transport just hanging up there 2 days now up here. So trading below here opens up the door, little gap, unfilled gap down there to go down. And so our internals are kind of ripe for some kind of a pullback. Now, we're in a new world here with these internals. I explained that before. Option traders been loading the boat. Right? See this 0.64 at the close, and these lower levels here under the red line. Well, this is how weird this is, because bullish levels where this popping up would be up here in the green lines historically, not even close. And so now this is dipping down. This, right, is almost tagging the upper band. It's well above 0.80. And yesterday got this up above 100. Now, I mentioned yesterday, look at the 2 days here of breath. This, I said on that day, that was great to have that kind of breath on the move up. But all of a sudden, this is, lower low or lower high. And well, yesterday was a go nowhere day, so that's not unusual. What was this day with that kind of breath? I would have hoped from the bullish case would have had another big bar tagging above the red line. So internals are real close here. And in normal market conditions, I'd say that is a sell signal. Now, let's see. I mean, you're close enough that this is historically would produce some kind of movement to the downside. So maybe this is the start of it. Doesn't mean it's going to crash. And but hey, this thing could drop 50, 60 points over the next several days. Set up as a buy. That's all good. And if that was to play out, we then look at other markets to see how they pull back, what kind of damage is done. And what does that mean? Well, a close under this level, right? Ideally, this is going to stay up here. But if we see it closing below the breakout bar, down below the low, that's a problem, right? S&P's not so much a problem here because the way it went up, it's not, several bars moving to the upside. Qs, up here near resistance, look to the left, right? You don't have to be a genius to look to the left and say, hey, risk is growing for longs and this area getting rejected and so on. Russell, up to these overlapping bars. So that's the factory work. The factory work works out quite well. It's repetitive and you get consistency. And right now, we don't have that type of event that says this is the moment in time, but the location of where prices are, our internals say an expectation for some kind of corrective price action. The alignment is there right now. So let's see how it unfolds. All yours, Dan.
Good morning, everyone. All right, we're still pretty loaded on the long side. We've been tightening stops yesterday, taking profits. All the opens look fine. NVST, we're long. We're getting a nice, yeah, Jose. Yeah, I already sent a telegram alert to sell half pre-market and then move stop 30-minute low for half. The only kind of negative gapper I see is Riot. And we have a put spread down the 47s for Friday. So we have 3 more days, Wednesday, Thursday, Friday. So go ahead and move stop 30-minute low. FGen, you're asking me if that's a reversal? I have no idea. There's no signs of a reversal. It's a nasty gap down to $24 and it's in a downtrend. So there was bio news on it. So I have zero bias on this until I watch it trade for a while. XL. Yeah, I saw that on my radar this morning. It's not a quality bottoming pattern whatsoever, because look at it's just straight down selling. I do like pickup in volume, bullish engulfing, uptrend on the 15. So if you want to day trade it as a 15-minute pattern, that's fine. Thomas, KMI, yeah, we're in this already. We had a covered call, but you can add over the highs. We're in it. RTX, it's bullish consolidation. I would wait. Today's Wednesday. I'd wait till it got over Monday's high, and then it's a bullish continuation. Stavros FM. FM, it's up 4 bars, far from the 20. So there's nothing to do with it on the daily, although the weekly is bullish. Top 20. Okay, Sam, I'm gonna email those to myself and we can look at them later, unless you have 1 or 2 in particular. But when you say Wall Street bet, this and that, I'm only really interested in if it's something they can kind of move around. I don't think they ain't gonna, in my opinion, trading Tesla, AMD, Apple, Baba, or Roku, will just be our regular master trader approach chart reader. I'm more interested in if we can nail a pattern on those things that they can move around. Yeah, no, we'll look at them. Let me continue here. Some gaps. Ugly day yesterday on volume, but it's a deep retracement. There's nothing to do on the daily, but it could be a day trade. JP Morgan, that's the big news this morning. Everyone's blabbing about Jamie Dimon's 68-page report. He says he's bullish as can be until 2023 because of the Fed stimulus and policies. And, my only just head scratcher is, well, let's look at the spiders. I have to even go back in time. I remember the day the Fed came out with their policies. I'll tell you the exact day. I remember it well. It was right here. I remember that picture. It was 4-6. We were waiting to try to get a retest here after the Corona collapse. We didn't get it, and that Fed announcement set up the low. So my question is, that low is 257. Why is Jamie Dimon coming out now 150 points higher with the news that's been existing for a year? A year we've been playing that scenario. I don't know. It's just another one of those. He must want to just keep people in his business. Exactly. No, I know. We say it's either politics or money or ego. And yeah, he wants to keep people trading. All right, let me continue. ASTC. Today we're talking about bottoming patterns at MT Live. It's going to be a fantastic session. Hey, Brian, your drop down, please. So this is a bottoming pattern. Look at all these flat MAs. And now the something something is a gap breakout. It's gapping here to 290. So the gap's too big for me. I actually already posted it into our swing advisory letter saying, hey, let's watch a little intraday pullback. There's another article in the journal about office demand. We know that's changed forever. Who doesn't admit that? But SPG is a Simon Property REIT. Well, you know what they be? I think they're more malls instead of office buildings. But nevertheless, this is the one I looked at, and this is a bullish consolidation after this gap reversal. So that looks great to me. So that's a long watch. Credit Suisse was in the paper. They lost 4.7 billion on that little leverage hedge fund problem with the VIACs, et cetera. But it's holding. So the market's digesting the loss. Beyond, I posted as a watch here. Beyond bottoming pattern, a sloppy bottoming pattern, because it's under the 20 and lower lows, lower highs. But today's gap might be the start of something. PayPal is a bottoming pattern. I'm going to be looking to short puts on that, a put spread. MA from yesterday, 5-minute high. I think we can go ahead and do the put spread for Friday only. SKLZ. So that's a good question, Michael. And ask us today in MT Live, but I'll give you the quick answer now. Is it a bottoming pattern? I don't know. It's going sideways on the 200, but the weekly's in a nasty downtrend. There's no signs. There's no event bar to jump out at me and say it's ready to go. So that, until proven otherwise, that's a bearish consolidation. This is a bottoming pattern. It's going sideways here at a prior low, and the 20 MA flattening out. So this is a better one. And today it's gapping up. So maybe 30-minute high on this. Now slug, still holding well. That's kind of a sloppy W bottom retest, holding well. X, I want to watch this pullback here. It's kind of a sloppy buy setup, but remember last week's MT Live, greater than 100% retracement. Then I'm looking to buy a less than 40% bullish setup. So that's in the making right now. All right, MA we've talked about. On Dunking, Duncan is working on a failed cell setup. It has a price void, so 30-minute high. Let's keep an eye on that. UMC gapping to $9. No pattern. IMAX, I think these are earnings gapping up. Sloppy, no pattern. SGH. No great pattern, although a deep retracement. Bullish price action at resistance. GNW. I don't like the way it trades intraday, although it has plenty of volume. But that's another bottoming pattern looking thing. Let's see if BBY. We don't buy breakouts that go from the bottom of the range to the top. So right now it's just in a trading range. MSM, no pattern, had a little upside shakeout. This is, this is like a failed bottoming pattern. See, it tried to hold, this retest broke out, and now, so that's an example of a failed one. So that looks lower. What my cruise line? Cruise lines are up today. The CDC is saying, okay, they may, they're giving some positive words, letting them sail again. But I was looking at these over the weekend, and I was considering giving some trades, and there wasn't much juice for a put spread, and for a swing, there wasn't a good price void, but they all moved up right where they should have. Norwegian, the best. That's where the CEO came out. But this one had the best price void of the three. So, Monday it had the gap breakout, but it was a big gap at resistance. So even though it kept going higher, it didn't meet my wheelhouse. Yeah, PXD. Ron, under yesterday's low, day trade looks good. All right. All right, PayPal. I'm watching to sell puts over 5-minute high. I think I said 5-minute high. If not, oh no, and on this one, okay, this one I gave intraday resistance, so that one's fine as posted.